Welcome to the B.F. Anderson Technical Report for August 25th. In business school, my favorite course was under Dr. Martin, and he taught statistics. So if you really think about technical analysis, what we're doing basically is we look at history, because that's all we have, to somewhat determine, what are the possibilities and the probabilities of certain patterns evolving. Well, the big concern everyone has now is that we've been in a bear market. Has the market bottomed? Are we starting to form a bottoming process that will hopefully unfold into an ascension phase? You want to accumulate your investments in the market during the bottoming process so that when the ascension stage begins, because that's basically been the pattern for the last 200 years, that you're in a position to take advantage of it. So here's an indicator that I found interesting. This was basically what we call a blast-off indicator, and we went back to 1942. And there have been 12 times that the market has declined 20%, which it has done here recently. Then once it breaks, where we take the 50-day moving average of all the stocks on the S&P 500, and when it rallies to over 90% of the stocks are above their 50-day moving average, 1 year later, the average gain is 25%. So if the market has bottomed, and we're kind of in that camp, that will be interesting. Now, the big concern people are having, now what I have here is a graph going back to the bear market of 2002, which was the dot-com bust. And this is the 200-day moving average. And you can see here we would rally up to the 200-day, fail, rally, fail, and then continue on down. Now, we hope that's not the case here. Now, if you go back and look at the same period here, that period back here was 2002, 200-day. So if you look at where we are today, we rallied up to the 200-day and got rejected. So it is a concern, and we've been rejected already several times here in the past. So let's just see where we are right now. The NASDAQ continues to stay basically in an uptrend as long as it stays above that lower moving average, and that lower moving average continues to move higher. Here's the mid-cap stocks, the S&P 400. Same thing, we're still above the upper moving average, and the lower moving average continues to turn up. Here's the New York Stock Exchange. Same basic idea. We are continuing to stay in an uptrend. Small caps, the small caps have rallied, held above the lower moving average. Lower moving average has turned up. So on these particular indexes, the market does appear to have bottomed. Here's the S&P 500. So you can see here, here we had the downtrend, how we get in the bottoming formation, now we're coming out of it. Now there's, with statistics, it's always possibilities and probabilities, and we could always come back and retest these lows again. The indicator that we showed at the beginning basically said, if we get that kind of rally above 90% above the 50-day, the chances are we have bottomed. Now, it doesn't mean we can't retest the bottom. Now, here is another indicator that we really need to see confirmation on. This is the 35-week moving average. This is the S&P. We broke above it, but then pulled right back. So we need to see that improve. Same with the NASDAQ. We came down, we broke above it, then we pulled back. So is this just a correction in the bottoming process? Could be, and we'll just have to see. Now, this is the aggression index, which is a very simple ratio where we're comparing technology stocks to consumer staples. Came close to giving a sell signal, which would have been a break below the lower moving average, but so far appears to be holding. This is our key economic indicators. Interest rates have kind of creeped up a little bit here. We're back above 3% on the 10-year. Price of oil is kind of stabilized. Looks like it's kind of putting in somewhat of a double bottom here, maybe turning back up. Financial stocks looking a little better. We want the banks to stay strong. Here is the new lows. We kind of got a little bit of elevated above the 40 a day. However, we have seen a lot of improvement here compared to, look at all this back here. I mean, this is a big improvement. Now, on the Renaissance Fund, which is a exchange-traded fund that deals in stocks that have recently gone public within the last 2 years, you can kind of see somewhat of an uptrend and continues to be in an uptrend, holding that lower moving average. Now, on the trend strength, we're seeing a little bit of a deterioration there. Last week, we got up to, over 50%. We pulled back on the NASDAQ to 37.5, still continuing to hold the uptrend. However, seeing somewhat of a pullback here. Same on the S&P. However, we maintained 50% on the trend strength. VIX, the volatility index got down below 20, kind of bouncing up a little bit here. Nothing to be too concerned about. Yield curve is somewhat improving. However, we're still inverted, which is, indication of recession. However, there is some improvement there. Now, on the top 5 stocks, remember, this is just a watch list. This is not a buy list. We haven't checked the numbers on these companies. We're just looking at the charts. And these have been some of the strongest stocks in our database. This is Petrobras. Again, oil and gas is starting to look very strong. Here's New Fortress Energy, which is more to do with natural gas distribution. As you can see, very powerful uptrend, staying above that 10-day moving average. This is Consolidated Energy, which is coal. It is well above the 10-day moving average, staying in an uptrend. Here we have Enphase Energy. Now, this is a stock that we own in our portfolio. We got a gap up buy signal, an ascending flag. Now we're getting somewhat of a consolidation. Yesterday it got back above that 10-day. However, the 10-day is flat to down. This is an interesting company. They are involved in microinverters, and if you look at the solar industry, everyone identifies with the solar panels. The most important component of a solar system is the inverter, and that's what this company makes. They make the inverters. Now, this is EQT, which is another natural gas exploration company. As you can see, all these natural gas stocks are looking pretty strong. So all in all, what we're saying here is we think the market is going through a normal pullback. We're still, we think, in a bottoming process. We have not started a strong ascension yet, but hopefully that's coming. If you have any questions, let me know. Thank you very much.